the floor of the CME Group. This is Danny Riley on this Thursday, February 11th. You know what? The S&P sold off a little bit this morning and it went right back up. And you know, we don't really know why, you know, because of all the negative overtones that are surrounding the markets with the things going on in Europe, you know, regarding the downgrades and Greece and all that. The market should be getting pummeled. But you know what? The problem with this is that everybody's looking at the same trade. They're all short the euro, they're all short the S&P, and we're going into the end of the week and we're going into a long weekend. So with that in mind, the markets are up a little bit here. Not the euro currency, but the S&P. What we're going to do is we're going to talk a little bit about a trade that we look at. The desk in particular, is a very well-known trader told us about this many years ago, is that we look for a low the Thursday or Friday, the week before expiration. Next week being the February expiration. So right now we've got the S&P up 11 handles, and probably it's at its highest level in a while, right? Yeah, we're on the highest. We're on the highs of the day, but we're also up near the highest levels that we've been in about a week and a half. Yeah, Jason's saying 1077 was the old high. But anyways, we're gonna look at some of the statistics that we got regarding the S&P cash stats for the February expiration. Tomorrow, the Friday before the expiration, out of the last 26 occasions, has been up 14, down 12. Now, Monday is a holiday, so there will be no mutual fund Monday, but Tuesday is a very, very strong day statistically for the Feb expiration. It is an up 18, down 6, up 18, down 8 of the last 26 occasions. These are big stats, and if you look at this correctly, with the market down so much and everybody's short, and the market going up right now, it's kind of telling you something's going the other way right now, and we're not here to fight City Hall. A couple days ago, and in the equity report that we put out, and we again continued into the last couple of days, we've said we don't really quite understand why the market's going up. We're neither too negative or too bullish, but we do think that there's a clear shot to the, well, we don't want to say clear shot, but we do think there's a good possibility that the S&P can go up to the 1090 level. There's a high congestion of buy stops in the market above the 75, 77 level all the way up to 1090. Thus, that's why we think the market can go up there. Again, you know, one of the big things that people don't understand is when the market sells off, they put in buy stops, okay? It's what everybody should do when they're trading. But what happens when the markets are holding premium, and we've talked about this a couple times, those buy stops tend to elect the offer side of a buy program, which in turn, they sell the futures and buy the cash, thus a buy program. So those buy stops, or what we're hitting right now, are actually helping the market move higher. What we're going to do is, well, here, the rest of the thing is we've got 11,000 big S&Ps traded. We've got 1.4 million minis traded, with about 380,000 of that done in Globex. So we've got just under about 1 million minis traded. We told you guys yesterday that the markets would be slower, and they are. We suspect that that's going to continue into Friday, and then we've got the long weekend. So when you look at all this stuff, maybe what we're just seeing is just another big short covering rally before we go back down in the dumps. We'll see you tomorrow.